What is up, guys? All right, so for my trading recap today, I'm just gonna get right on into it. First things first, what do? We gapped up today. It was a big gap. We got big news from Microsoft. They said that they were gonna just their guidance was fantastic. So Microsoft and Google both missed their earning expectations across the board. They missed like everything. But Microsoft saved the day by coming out and being like, "Bitches, we might have missed this ER, but our guidance is still good. We're looking good for the next year. Like they gave really good guidance, so that was super mega bullish. We gap up huge off of that. Of course, I feel like an idiot. I was coming up on here being like, yeah, look at the Head and Shoulders. Of course I'm wrong. I'll admit. Yeah, I know. Thanks, guys. But I'm glad I'm wrong. I would much rather be wrong about going to the downside, because if I'm wrong about going to the downside, that means we're going to go up. So I'm thrilled that I'm wrong. Thank you very much. Of course, I would have loved to have just been long everything, like I've done 3 times in the past and gotten fucking roasted doing that. So I'm not mad that I didn't do that. I could care less. Of course, I wish I didn't sell Nvidia. Nvidia's gone straight up from where I fucking sold it. Yeah, that sucks. Who cares? I can still buy it at a cheaper price from where I had it if I wanted to. So don't really care. But I bought a little more Google. I got a SPY call. I'm still long. But anyways, I'll get straight into the trades. First things first, we buy a SPY call. 2 SPY calls at 6:40 a.m. We hold those for the next couple hours. Even though this was a choppy mess, I mean, just look at this chop. I mean, just disgusting. Of course, I wish I held it in the FOMC, but these calls were just, I mean, I wasn't just going to sit them on all day. We got a nice move to the upside. I knew it was going to be a choppy. I knew theta decay was just going to occur, so I was happy to sell those puppies at a pretty decent gain of $76 at 8:04. Fine with that. Of course, I went way up, but I was planning on re-entering anyways because I knew FOMC was coming. I knew we were going to chop, so I was like, I don't need to sit on these and wait for theta to decay him to shit. I would have lost like $30 on that alone. So I sold them and re-entered different calls later. We'll get into that. But so I was just having some weird-ass candles. Like, look at these wicks on these candles. It was just some strange price action. So I was like, I don't need to take part in this. We'll have some direction later in the day. I'll go hard there, and I did, and we'll see. So next up we have so Google was just completely going straight up today. Mouth is dry. I'm talking a lot. Google went straight up today. Just have a simple trend line. We break the trend line. I grab a put. What's it do? It gives us the most indecisive candles I've ever seen in my life. Just a doji right on top of the EMA. And then broke the EMA over here. And then look at these I mean, just such indecision. Just nothing. Just buyers and sellers completely agreeing on the price. No break to either side. So I'm glad I got in that. I thought, hey, we might see a sell-off in the meeting before we rip. We didn't. It just went sideways. I sold it. I took a $13 L on that, which I could not care less about. Little scrape. I'm glad I didn't hold it. I clearly would have gone to zero. We went straight up. So that is my 1 L for the day. Oh no, 2 L's. But I'll get into the second one. So first thing, I knew I was going to leg in. I knew that, let's look at SPY. I knew what happens during FOMC. We get 11, we get a big green candle. It's almost always followed by a big red candle. But I saw that they did 75 basis points, and the market was expecting that, so I thought we might just go straight up. So what did I do? I grab one $398 call. I did what you call a strangle, where I have an out-of-the-money call and an out-of-the-money put. So I grab an out-of-the-money call first, and then I grabbed a put for $115. We get this big green candle. I thought we might just go straight up. Of course, it didn't, so I sold for a very small loss on that. Let me see. A $17 loss on that. So I should be writing this down. Let's get some big maths going. So I took a $17 loss on that, which I wasn't too upset with. 76 minus 13 minus 17. Because obviously we went straight up from there, so I'm glad I sold that put. It would have just gone to zero. But we get these weird red candles, so I was always thinking about legging in. I wasn't going to buy the entire position initially. I was going to leg in because I knew there would be so much volatility that I could get probably cheaper prices on these calls. So I grabbed the one call, I grabbed the put, sell the put. Next thing, I grab another call when we get that red candle at $1.28. That's a $20 lower price, and I grabbed the first one. We keep going lower. I grabbed the third one for $1.11, and then the rest is history. Powell came out and I was just watching it, just could not believe it. I almost live streamed it, but I was being so athletic with the trades, I didn't want to try to be like talking during it. So the second these words came off his mouth, it will likely become appropriate to slow rate hikes. The second that came off off his tongue, we got this big ass green candle and just went straight up. So obviously those went crazy. We took a $307 profit on that. Yes, it kept going higher. I wasn't going to just hold them. It was a 1 day out or 0 day contract, so they're expiring today. They were in the money by now, but the second those go the other direction, it all goes to zero. So I took my profits. I was like, I'm never going to be mad about taking a $300 profit in literally 10 minutes. So took the profit, and then I was like, I think we're still going to be going up though. I saw that we were still climbing, so I grabbed a further out call for 2 weeks, $400 call that I plan on holding for the next couple weeks because I think we will continue to rally, assuming earnings aren't a complete trash, like dog shit, fucking heap of shit. I can't even talk, but because this is what I was saying all along. Once we hear that the Fed is thinking about slowing down, pausing, reversing, once they start talking in like that is when the market will start to go up. So I'm gonna play by my word. If I'm wrong, so be it. But this is what has always happened in the past. Once they talk about slowing, things begin to recover, and they have talked about that. They didn't talk about that any point before this, so that's why I'm not like, oh, why did I not grab SPY calls at like 380? You know, I wish I did. But if they'd come out and said anything different, we'd have the opposite day. If they were down 100 basis point and they said we're scared that inflation isn't slowing down, then we still have a lot of ways to go, then that would have been very bad. But that didn't happen. There was no price action that could have shown me what Jerome Powell was gonna say. There's nothing you can look at that chart and be like, this is what Powell is gonna say. So it was all depending on that. So that's why I'm not like regretting. But anyways, I took a $307 gain off of that. 307. Then I enter a long out call, but I'm like, all right, I'm just going to play with pure profits. If this call goes to zero, I don't care. I throw another call into the proverbial ring for a 405 call. It was like 116 bucks. I just was like, all right, I'll throw this out there. If it keeps going up, I'll take profit, which it did. And I grabbed that one at, let's see, where am I? Bought a call 405. So I grabbed that at 11.50. I ended up selling that for a nice little profit, $74. I sold that 40 minutes later, so plus 74 on that. So I will talk about the shorts that I did cover because of course I was with the other bears that were covering their shorts after the Fed news today because we got our cheeks clapped. So sold that one, and I believe other than that, that was basically my last trade. I'll talk about my earnings plays, but first I'll get into my shorts covering. So Amazon, naturally, I wish I took profit. I said that yesterday. I was like, maybe I should take profit on this Amazon short. I was up like 160 bucks, you know. Of course, hindsight's 2020. Of course, I wish I did. There was nothing to signify. It was all just for Microsoft. That's why I'm not like, oh, I should have seen that. If Microsoft didn't come out and have such great guidance, we would not have rallied early today because that 100% was the reason for that. And then if the FOMC didn't come out and talk so sweetly to us, we wouldn't have gone straight up. So I covered my Amazon put, or my call. Covered my Amazon short. Jesus Christ, I can't talk today. What did I buy that back at? So 120. What was I at? I think I ended up taking about a $10 loss on it overall. So I basically cut it short. I was at like 198 or 100. In 1998, and I sold it. So yeah, about an $8 loss on that, -8. That wasn't the big loss. Of course, I doubled down on my Apple put position yesterday, and I ended up selling that at about a $260 loss. So that really hurts the old gains I made today. But it's a loss I can live with. It sucks, you know. If that's like an entire Green Day, a good Green Day's worth of gains for me, which that hurts. I'm not thrilled that I had to do that, but you don't. When a position turns on you, you take your losses, you move on, and that is clearly moving against me when the Fed comes out and says things as nicely as they did today. So no denying that that is a loser of a position, and I'm not like I should have never been in it. You know, if this was any other time this year, it was always sell the rip, and now we are at buy the dip because FOMC was so sweet to us. But that was about a, let's see, minus 280. Oh no, 260. That's what I said. So we covered that. I realized that I should just not sit on these shorts. You know, they're losing for me. So the only thing I'm holding short are these NASDAQ puts that are probably just going to go to zero, and that's probably going to be like a $900 loss on that. That sucks. Of course, it sucks. But I was convinced that the market was just going to keep going in a downtrend. You know, it was just based on the price action. I was just seeing that we're still in the range. We're still in the potential zone where we begin a sell-off if the FOMC meeting ruins everything. So I was convinced of it. It didn't work out, of course, yada, yada, yada. The one time I don't buy the dip is the time it actually rips. I should have known, you know. I should have known, oh, hey, I'm feeling a little too bearish, so that means the market's going to go up. But another loss I can live with, so it sucks. But I haven't even realized it yet. It's still an unrealized loss. I'm not going to count it. Not yet, anyways. I'll wait for a big green day before I count that one. But I did buy a little bit of Google. I added 50% of Google. I added 50% worth of shares to Google. So is that 20? About 10. Because Google is still at a very reasonable price down here, and it had fantastic earnings, and it's looking like we're going to rally. I mean, had a high of 150, it's at like 113. So that's what I kind of want to talk about. Google is not a risk-on stock. It is generally a safe stock. You know, it's a really good company. They have solid growth, but it's not like a risk-on. Risk-on stocks are like Coinbase or Mara or SoFi or any of the SPACs that are down to like $3 right now. Any of these hyper growth companies that make no money right now, they are still going to struggle. Powell said that specifically. He said we still are going to be seeing slowing growth, and that is not when you own stocks that are based on growth. He still says that it's just our rate hikes are still going to affect growth. We have to see slowing growth, unfortunately, and so it's still not a risk-on time. Risk-on time is when we have no inflation, when the Fed rate is back at 2.25, everything's hunky-dory, we're in an uptrend. That is when you go risk-on. This is not a risk-on environment yet. Those are still very risky stocks. You look at SoFi's, I mean, it's up like 5%, and you're thinking, well, it'll probably go back up to 25, but we're not going to see 25 on SoFi for a long, long time. I say that with high confidence. It will rally probably back to 10, maybe. I don't know. I'm just not... I see no reason to go back to a risk-on environment because these small caps, I mean, we will start to see money flow back into them, and I will play them if that is the case. But right now, I haven't seen enough to be like, oh, everything's going back to normal, because you got to think about, we're still going to be in an environment where the rate is going to be at 3.5 to 4% potentially if inflation doesn't go down, which still means money is going to be tight. We are going to, so he talked about that as well. We're still going to have the quantitative tightening. He said the Fed will probably be to the point where they're fully selling off their shit onto the bond market by January. So we're still going to have the Fed dumping money, or sucking money out of the market, as opposed to pumping it into it like we saw these past couple of years. So we're still not back to like the fully 0% rate hike or 0% rate hike, 0% Fed funds rate where everything just goes straight up. I think these will see some short covering, so I will just play them for a day trade, but I'm not going to be like, all right, I'm looking for deals. I'm going to load up on Mara and Coinbase and all these other Upstart. You know, these stock, I mean, Upstart was at $400 a share. Like, these things aren't going to see all-time highs, maybe ever. I mean, it was like a dot-com bubble. You look at the dot-com bubble, you could zoom out on Qualcomm. Let's do a little history here. This is my reasoning for this. I mean, Qualcomm, back here in '99, it reached almost $100, which is insane. It settled down here at 80 for a while, and then what did it do? It dumped all the way down to 28, 27. It came all the way down to 10. People were probably like, holy shit, this is such a good deal. I'm sure it's going to go back to that all-time high soon. And where did it get back to that all-time high? Not until about 17 years later, back in 2019. So, and this is Qualcomm. This is like a decent company, but these are semiconductors. This is the 90s. You know, of course things have changed. I'm not talking about semiconductors. I'm just talking about the tech bubble that we were in. We're not just going to see everything return to the value it was at. That was just a complete euphoric meme style market. We're still in the trough, and that's the thing. That's why you buy these risk off stocks like Google. Even some people say that's too risky, but you buy these stocks that are so safe and make so much money because those are the ones that lead the market back up. It's not going to be like the market's rallying behind SoFi or fucking Fubo. It's going to be these solid companies that have hardly even sold off that much, or Tesla. Tesla, the same thing. It's not going to be those companies that lead the market back up. So I want to be invested in the companies that are actually going to go up. And then once the market does go back up, those other companies, they follow suit. So yeah, that's all there is to say about that. I'm just going to play the safer companies, which, I mean, even AMD is like a little risky. I mean, AMD, these semis just got so ridiculously overvalued, Nvidia too, that those might not see all-time highs for a very long time. But who knows? Anything can happen. So anyways, all in all, let's see. Let's do some big maths. No. Minus 17 plus 307 plus 74 minus 8. And then minus 260. So all in all, we took home, or my net like gain for today, because I realized losses on the Apple puts, was $159. Yep, I know. I should have just bought 10 SPY calls. Of course, I went straight up, but I didn't feel like going. I mean, even I wasn't fully convinced. I saw the price action, but I still wasn't like, I need to be more exposed, yo. It's the way she goes. So Green Day, and I'm not like, oh shit, I needed to make all my money back today. I'm like, this is good for the whole stock market when the Fed starts talking sweetly. So $159 on the day. I'm still anticipating what happens tomorrow. I think there's still going to be a lot of price action to make a lot of money off of. I don't think now we go into chop zone. I think we see like a full-blown rally from here probably. Like, this rally has been nothing compared to what we're probably going to see now. So let's talk about, Meta. So my other orders were, so Meta, what did it do last earnings? And this wasn't in my entire conviction, was, oh, look what it did last earnings, they'll probably do that again. I think Meta is just an oversold stock in general. I think it is a cash cow. They make a shit ton of money, and they gapped up like crazy last time because their earnings weren't as bad as everyone was expecting. So I grabbed a $100 call, just like a complete lotto. I care less if it goes to zero. It's probably going to go to zero because they're down after hours. Of course, they missed on their earnings, so that sucks. I was just like, I thought the market was going to be so bullish that we were just going to, even if they had bad earnings, they would have a fine guidance, and they're only down like 3.5%, but take the L. I was hoping for a Microsoft / Google kind of response because I think Meta is one of those stronger companies, but apparently it's not. And then same thing with Qualcomm. Except Qualcomm, you look at all their earnings, they always gap up after their earnings. Always. Look at the earnings here, gap up. Over here, gap up. Over way back here, huge gap up. Qualcomm is just a freaking juggernaut of a company. But they are very affected by consumer demand, and we know consumer demand is coming down. So they actually beat on their earnings, of course. I should have known that they would both go down the second I grabbed a call on both of these companies. So they had earnings per share of $2.96 versus what they were expected to have at $2.87. So a decent beat on that. A beat on revenue at almost $11 billion. It was a very small beat on revenue. But just fantastic numbers across the board, and of course it's down 4% after hours because they had bad fourth quarter guidance for Q4. So that sucks. I grabbed a call on them too. So of course once I get bullish is when everything's gonna fucking sell off. That's just how it is. So I grabbed a tiny little $100 call on that. So I'm probably gonna wake up and those are gonna be at zero. That sucks for tomorrow. We're down to ground. We're down to what we started at basically, but. Those are really good companies, and I've just been watching so many crazy earnings. I wanted in a little bit on the action. It was it was pretty dumb. It was basically gambling to buy both of these, but I just really like both of these companies, and I was hoping for something better, but they both disappointed. And now, of course, the market is responding negatively. Now Apple's down 0.5%. Now that I sold my puts, watch everything just gap down heavily. So that's why I'm really not really long, but I just grabbed a really small NASDAQ put for tomorrow in case we do completely gap down tomorrow and we just dump tomorrow like we have in all the past FOMC meetings, because the market realizes, oh, well, now they forget about what Powell said, basically, everything he talked about, and then they go back to just looking at, oh, it's 75 basis point hike, which is still really bad for the economy. Bad for growth for the economy. So that's kind of how these meetings have gone. I didn't want to go straight into it with no protection whatsoever. This is what I've been doing. I've been protecting myself. I don't just go full long. It just makes sense. I think it could happen. If it doesn't, I take a $50 loss on that. So be it. But if it does, then I have my game plan built into the day. If we gap down hard tomorrow and we just dump, I already got my put. I'm good to go. And yeah, that's that. So all in all, a great day. I'm happy with how I did today. Of course, I wish I could go back in time and tell myself, hey, you shouldn't be short anything right now. Powell's about to give us the biggest green day ever, but that just didn't happen. So you live and you learn now, and I'm not going to make the mistake of doubling down on my shorts. I'm going to accept failure. I'm always going to fail. There's always going to be more failures ahead for me, but I accept failure this time, and now we look forward and probably upwards, because he said some nice shit today. But I'm not gonna get too bullish. I'm neutral. I'm gonna see what the market thinks tomorrow. They have to digest it and think about it, and we'll see what the futures market does. So yeah, all in all, a green day. I was thrilled with it. I mean, I could have taken profit on this SPY call when it was up like 150 bucks, and it would have been like plus 600 on just SPY alone today. But I'm confident we're gonna keep going, and that's gonna probably double. Maybe, we'll see. I think SPY is gonna see. Let's take a look at SPY. I think now that we broke out of this, SPY has to take out 405. I don't think it'll have any issue. I think it might have an issue once we reach over here, because this was such a strong consolidation zone, but you can see the volume over here is so weak. I think if there's enough bullish sentiment that SPY, it's filled its gap, so now it doesn't have the gap fill momentum, but it's still going to be able to shred through this at least until we get up to 410-ish. We could see potential rejection. But I do like SPY to 410 by, maybe by tomorrow or Friday. That is my guessy guess. If I'm completely wrong and we dump tomorrow, then I don't care. I flip my bias and I buy some puts and just day trade. I think I need to come back to just day trading, because just trying to guess where this market is going to go is just impossible. There were signs that we were going to go down. I followed the signs, but then I ignored the signs that we were going to maybe go up, and that's what happens. And I hate just waking up and being like, oh, I held all this shit, and now I have no control over it. I feel like my portfolio controls me. I want to control the portfolio. So I'm probably going to go back to not so much swing trading stuff, just trying to make the most of the movement during the day. I think because I think in my mind, I'm like, I don't have to try as hard. If we get a big green day and I'm in a bunch of longs I just held, then I can just sit there and watch my money go up. But I need to not do that. It's just like laziness in my mind to think like, hey, I'm already in longs, I shouldn't be taking longs. Then it makes me think, oh no, if we come down, I'm going to see that number come down, so I should buy puts here. It just fucks up my thinking. I wish I could just have a completely different portfolio where I don't even see that shit, but I sit there and watch the number move, and I know it's an issue I have. But I think all in all, it'll probably be better if I don't swing so hard like I have been. Just jotting out some thoughts there. But yeah, anyways, guys, it was a good day. I was thrilled with today. I made some hard scratch off of SPY in like 10 minutes, so very cool. We'll see what happens tomorrow. I'm bullish as ever, man. If we rip tomorrow, I'm buying. See ya.